And welcome back, everybody, to the Market Knowledge Podcast. We're talking to life science CEOs, founders, and influencers. My guest today is truly immersed in the life science ecosystem in San Diego. He's also my go-to guy when it comes to venture capital, life science funding, and all things capital markets. David Crean is here. Hey, David.
Hey, Bob. Good to see you again. Thanks for bringing me on.
Absolutely. I can't wait to get your take on what we're seeing in the markets right now. And I think everyone knows you in the life science ecosystem here in San Diego. But for those who don't, why don't we set it up a little bit and provide a little context and tell us a little bit about what you're working on now and how you got here.
Great. Thanks so much, Bob. So, I've been working in the life science healthcare space for more than 30 years. Was deeply involved with corporate strategics, doing M&A and business development, got into private equity, got into investment banking, helping clients either grow or sell their companies. And then recently also started a venture capital firm. As you know, I'm a fund manager. And so I'm a managing general partner of Equitos Venture Partners. It's a venture firm focused on the life science segment exclusively. And it's an emerging fund, first-time fund. And, in parallel, I also am a managing general partner for Cardiff Advisory. It's a M&A boutique investment bank. I'm a registered representative of a FINRA, and I work with clients to either help or grow or to exit their business. So I'm deeply immersed in this space and have a fair amount of knowledge. And to your point, I know a few people in town, so I'm frequently called on to, provide my guidance in terms of what's going on in the life science segment in San Diego.
Well, let's get right to it then. With those two kind of parallel paths, you get to see a lot, almost everything. And so we've been seeing, after a couple of red hot years in life sciences and the funding and the growth, we are seeing things start to slow down just a little bit, and in some places even more. Where are we, do you think, in that cycle?
Great question. If you look at 2021, life science, biotech performed exceptionally well in 2021, not in spite of, but really because of the COVID-19 crisis. Looking at vaccines, antivirals, it really provided a great deal of innovation to address COVID-19 and deliver a significant top line surge with biotech revenues up. Certainly BioNTech and Moderna, it wasn't, they were certainly up. They collectively generated over about 40 billion in US revenues in 2021. So significant. And then you get this dramatic rise in this bump that underscores the extent of what the COVID-19 market did and dominated the sort of the biotech story of 2021. And, there's this, I think, looking on the horizon, there's expected to be a great number of approvals that should be really only the start of the wave of this new innovations. It's all about innovation reaching the market. And biotech pipelines are certainly full. To my reference or my research, there's some 6,000 drugs which are in active development with really emerging biotechs accounting for about 65%, certainly the lion's share of that. And this includes next generation biotherapeutics, CAR T, NK cell therapies, gene editing, RNA therapeutics, and who are going to need those? Well, it's the big pharma guys who are going to need access to those biotech innovations, and they have a loss of exclusivity, threatening to erode their industry revenues, and they need to replace it. So I'm really very bullish on the health of the biotech R&D engine. Certainly, it's a cause for optimism. However, after 2 years of this disruption that we're going through, this normalization should bring a rebound in product demand. And unfortunately, the aftermarket of this pandemic also leaves biotech with some significant challenges, as you just referenced. And those challenges is a sort of a decisive shift, if you will, in investor sentiment. And we saw that in fourth quarter of 2021. So, you saw sort of the public sentiment. Now it's starting to bleed into the private sector, especially in terms of valuations. Valuations have plunged dramatically. You saw it on the public markets. There are over 200 publicly traded entities in the biotech sector, which are operating at a negative enterprise value. What does that mean? They have more cash than their market cap. So we're clearly going through this, living through what I call an innovation renaissance. There's a lot of great technology, and the fundamentals of the industry I think are strong. However, from a public stock market perspective, we're living through some of the deepest and longest corrections that we're ever going to see to the biotech indexes since their inception. And so we're, I think, trying to react to that, right? Seeing what's going on in the public. Now it's starting to bleed into the private, and there's a little bit of lag. And frankly, biotechs are, with this reduced access to capital, means they have to navigate these waters and these challenges. What I see is this shift towards maybe looking at acquisition, or certainly other types of M&A activity, looking at partnering deals, any way to get access to capital, because many of these privately held companies are finding difficulty with regards to identifying capital and acquiring that capital. So those are the things that I'm seeing out there, Bob. It's a very interesting market. I will tell you, from a venture investor standpoint, it's never been a better time to have a fund. You can get some incredible bargains of good technology, good people, but frankly, they're having difficulty raising money, and the valuations are being reset. I like to say now it's the flat round is the new up.
Yeah.
So
right.
if they raise money in the previously, they're looking at dusting off the old note, if you will, and the prior round, and using that. So interesting time. So valuation sinking, financing's becoming more challenging.
Let's touch on that a little bit more. It appears, and you touched on it a little bit there, that the investors, the venture capitalists are flush with cash, and can really be more selective now on where they're putting their money.
Yeah, they are being certainly more selective. The coffers are filled. There's a ton of money, even in the private equity market. There's over $3 trillion of dry powder. Venture capital has a significant amount of dry powder as well. And so what I'm seeing are VCs, for example, venture investors, are looking at their current portfolio and ensuring that they're having enough money to extend the runway, if you will. And we're seeing longer and longer due diligence processes. They're trying to see, is this really where I want to make my bet? So I'm definitely seeing a little bit of that. We talked about the public markets, and then they were bleeding into the private, where we saw the immediate hit was on the crossover rounds. Those are those privately held companies in that stage prior to going public. So those crossover rounds, we're seeing, definitely a hit on valuations there, and some of the VCs ensuring that their later stage venture investments have enough capital to extend the runway, and making sure that they have enough to remain strong and viable. So that's where we were typically seeing that. And then, we're now seeing sort of, let's call it 2 quarters after the public, we're starting to see some of the earlier stage investments starting to get now hit with shrinking valuations. And, this is causing VCs to reassess their investment pace, and as well as their strategies. So many of these VCs, just overall, VC-backed companies are working to solidify the portfolio's balance sheets and focus on optimizing cash to better positioning themselves during this downturn.
So, and as we go through this downturn or normalization, as you mentioned earlier, to the local markets here, how does that affect San Diego? Is San Diego well positioned to weather this storm?
I don't see San Diego being any different than some of the other life science ecosystems. San Diego has a very vibrant life science ecosystem, and they're faced with the same types of challenge, whether it's a seed stage or an angel stage company, all the way out to early stage and late stage venture. They're still going through the same things as the ecosystem of Boston, Cambridge, up in the Bay Area. They're really faced. I think it's kind of pan ecosystem. It's not San Diego centric. The things that I get concerned about in terms of San Diego, maybe that's somewhat tied to investments, is it's about talent. The biggest challenge for me that I see is continuing to bring in and create an external talent pipeline for this ecosystem in San Diego or in Southern California. And this goes across the whole biotech sector. I think the talent pool, the talent pipeline, has become an increasingly major issue within the space. Can you imagine, how are we recruiting all these people? How are you recruiting someone from Texas or from maybe some area or geography in the United States, which doesn't have, they're getting paid maybe, let's say $100,000 as a base salary. How are they getting recruited into San Diego? Today, that money's not going to go very far in San Diego. So one of the things that we really tout about San Diego is we have a great human talent pool here. But
Right.
as we continue to grow and as you continue to find technology and it emanates here and you start to try and build and grow, I get worried about talent. That's a big one. But it's pan geography. It's not, and within the ecosystem, it's just not San Diego centric. But those are the ones that I certainly am focused on.
Yeah, we talk about that all the time in the real estate space that I'm in with life sciences. There's a battle going on for space, and there's a battle going on for talent.
Yep.
And companies have to consider that when they're making decisions.
Absolutely. Look, how would I best describe, the San Diego life science ecosystem? I think it's vibrant. One word, it's vibrant. Yeah. San Diego continues to strengthen its position as one of North America's largest life science markets. The growth in this sector has, and you can speak more eloquently about this than I, just being in that real estate market, that growth in that sector has directly translated into increased demand for lab space across the major markets, and in particular in San Diego, Southern California. Coupled with the strong capital inflows and the amount of money that's out there, whether it's private equity or venture capital, life science companies have increased their footprint, if you will, in these markets, driving up rents and increasing occupancies. The core, as the core of the life science industry is really anchored, let's call it, in this coastal suburb of Torrey Pines, right? Right. It's home to UC San Diego, private research institutions like Scripps Ranch, Salk Institute, Sanford Burnham Prebys. And we're seeing more and more industry collaborations with public, private, and academic collaborations. You got a talented workforce that we just discussed. Also, high quality of life. That's why we want to still live here and pay the high prices. And we have strong anchors with big publicly traded companies, or at least strong institutions like an Illumina, a Pfizer, a Bristol Myers, a Lilly, a Takeda. The region itself is home to about 1,700 life science companies. That's significant. You're not going to find that in too many other geographies, right? And so we have a number of independent and university affiliated research institutions. So it's a great place to be. And from your perspective, I would love to hear what's going on in that market of the lab space. Currently, my notes talk about 2.3 million square feet of construction countywide, and more than half of that is already pre-leased. So what's going on in your area, in your swim lane, to better prepare or to best prepare for what we're expecting to see over the next 2 to 3 years?
Yeah, that's a really good point, David. And I think that pipeline that you talked about of what's coming out of the ground and what's going to be available in the lab space area is that's the big question is, will all those buildings actually be built, and what kind of a slowdown are we going to see from now, over the next 24 months on those properties? And as we talked about offline a couple of times, it's going up to Carlsbad,
Yeah.
and down to downtown. And one of the buildings, the Genesis building downtown, got their first tenant, so that's great for them. And so we might see some momentum heading down that way. And as you've mentioned before to me, you like the idea of maybe going downtown at some point as well.
Right. Yeah. I was going to ask you a little trivia. I mean, what are you seeing just in overall within the county, the general price per square foot within San Diego County from your perspective?
Loaded question. First of all, for sure.
Just in general,
it varies. As we're talking, in the Sereno Mesa, Torrey Pines area, we're looking at these days per foot net anywhere from $5 on up, to $7.50 at times.
now,
It's going to
now
go
I know
down.
now I know that you have a colleague in Boston, and to give people perspective,
I knew this was heading somewhere. This is great.
what is the average per square in Cambridge, for example? It's about $1. It's about like 120 to 140.
Yeah.
So you have to put it in perspective.
Yeah.
$5 to $7 sounds like a bargain relative to putting this in Boston, or putting it in Cambridge. And people need to sort of have that perspective.
It's similar to cost of living, right, between here and the Bay Area, and traffic, and you got to put all this stuff in perspective and model it all out, right?
Right.
Okay, last question for you. I do, I call you the life science connector all the time, and I know you're active on social media. So I wanted to ask you, what is your strategy for social media and things like LinkedIn? Do you have a thought process in mind to where I'm gonna post things because they say this to me?
Great question. My strategy there is to be seen as an influencer and of value to people, not promotional, not self-promotional, but how can I help an entrepreneur or a board, or a C-suite in the information that I know or have access to, and try to bring value to them. So you'll see me sharing materials, sharing stories, me providing my key opinion leadership on that, and connecting with people. And at the end of the day, it's all about providing value to them, not providing value to me. I think I get that quid pro quo. It's about providing value. And so that's really my strategy. I connect with my key referral partners once a month. Those tend to be M&A attorneys, other financial advisors, wealth managers. Those are the people that are out with their clients and having to just determine what do we need to do differently, whether that's for growth or for exit or for partnering. And so that's really been my approach, Bob. And so far it's worked quite well, but I do try to stay up on the market. I don't have a big team sort of, putting all this social media
Yeah.
out. I'm very active, and I invest my time in it because I think it's critically important.
Yeah, and it can take time for sure. And speaking of providing value for everybody who's listening, David has accepted to join this show every now and again. And as we together will interview some of San Diego's entrepreneurs and life science executives. So super excited about that. And David, thanks for being part of it.
Thank you. I'm really looking forward to that and providing some value to you, what you're trying to do, and certainly to the entrepreneurs out there who need a little hand holding, right? So super excited about it.
Great. Thanks, David. Really appreciate it. Thanks for being with me today, and look forward to talking to you again really soon.
Thank you for inviting me. Bye-bye.